Hello everyone, my name is Mr. Cleophas. I want to do a past paper question. That's management accounting, MA. MA is in intermediate level. I want to do a custom past paper question under marginal and absorption costing. Marginal and absorption costing. It's a common concept. This is December 2021. So December 2021. Question 3A. Question number 3A. I know it's a bit long, but just to follow it up from scratch, then I know it is going to help you. So I read the question. Question number 3A of December 2021. It says, the cost accountant of ABC Limited has provided the following information relating to production of a single product branded Z. Production, we are given the period 1, period 2, period 3. So you're given 3 periods for these products. The production in kilograms for each period is given. For period 1 is 30,000, period 2 38, then period 3 27,000. The sales in kilograms for the 3 periods, period 1 30,000, period 2 27,000, in those are 27,000 kgs, 38,000 kilograms for period 3. Opening stock, we only have the opening stock in period 3 of 11,000 kilograms. Closing stock, we have closing stock in period 2 of again 11,000. So the closing stock in period 1, the closing stock in period 2 becomes the opening stock in period 3. Then additional information, we are told the financial details for 1 unit of product Z based on a normal activity level of 30,000 kilograms is as follows. So we have the financial details for 1 unit of product Z, and this one is based on the normal activity level of 30,000 kilograms. So direct material is 1.5 shillings. Direct labor is 1 shilling. Production overhead is 300% of labor, which is 3 shillings. Total is 5.5. Then we are told the selling price for product Z is 9 shillings per kilogram. Administrative overheads are fixed at shillings 25,000 per period, whereas 1/3 of production overheads are fixed. Required, prepare operating statement. That is the income statement, that is operating statement. Roman 1, using variable costing. Roman 2, using absorption costing. Variable costing is the marginal costing. Another name for marginal costing is variable costing. It is called also direct costing method. It is called also contribution approach. And it is the one called the marginal approach or the marginal costing. If it's absorption costing, is called a traditional costing. It is called indirect costing. It is also called the total product costing. It is important to know those names and each of the methods. I want to start with the marginal costing or the variable costing as per the question. So in this case, you need to have the income statement is called, what is the name of this company? The cost account of ABC Limited. ABC Limited. This is operating statement. Operating. We have operating statement using marginal, let me say variable, the way they have said variable costing. And because of the space, remember we have periods. So I'll have period 1, period 2, then we have period 3. For each period, I'll have shillings there, shillings there, shillings there, shillings there, and shillings there. Then the last one, shillings. I think they're not in thousands, not in thousands. So this will be, let me have this as period 1 to be there, period 2 should be there. So in this case, you need to start with the sales for the period because it's income statement, sales or the revenue. So for this case, you need to determine the revenue. Let me check. How many units were sold in period 1? The units sold is 30,000, 27, and 38. So selling price, so this 30,000 kilograms. Here we need in shillings, multiply by the shillings per kg. So in the period 1, the sales in kilograms, they are 30,000. So I'll pick 30,000 kilograms, 30,000, multiply by, when you go to additional information 2, the selling price of product Z is 9 shillings per kg. So times 9. Because 1 kilogram is 9 shillings and they sold 30,000 kgs. So we have 270,000. So sales I'll put here for period 1. Period 1 is 270,000. I want to do the sales for each period. Period 2, we sold 27,000. 27,000 multiplied by 9 shillings. I'm getting 243,000. 243. Then the last one is 38,000. The sales is 38,000. So 38,000 multiplied by 9, you get 342,000. Then you less the marginal cost of sale. Cost of sale. The marginal cost of sale will start with what? Opening stock. Do you have opening stock in period 1? No, it is a dash. Opening stock, there is no opening stock in period 1. Opening stock is not there. Period 2 opening stock, there is no opening stock in period 2. Period 3, yes, it is there. We have an opening stock, but this one we multiply with the production costs. Production cost this time is made up of what? Only the variable cost. That's why it is called the variable costing. Add the variable cost per unit. The total production, no, the variable cost per unit. Variable production cost. That is how I should put it. Get the variable production cost per unit, not just the variable cost. Variable production cost per unit multiply by the opening stock units to get the value of the opening stock. So, variable cost, when you look at direct material is variable, direct labor is variable, is part of production. Production overhead is 3,000% of labor, yes, but we were told about the fixed one. I need to exclude the fixed costs, the fixed production overheads. We were told whereas 1/3 of production overheads are fixed. If 1/3 is fixed, it means 2/3 is variable. So 2/3, 2/3 times the production overhead per unit is 3 times 3 is 2 shillings is what should be variable. So I should add 2 shillings for production overhead plus 1 shilling for direct labor plus 1.5 shilling of the direct material, which is 4.5. So in this case, the production cost is 4.5 shillings, not the way it is there, 5.5. 5.5 we shall use it under the total costing method or the absorption method or absorption costing. So this time the opening stock here is of 11,000. I multiply by 4.5. So times 11,000. So I have 49,500 is the opening. It's the opening stock for period 3. Opening stock for period 3, which is 49,500. Okay. Add production. Production cost, you multiply the 4.5, the cost of producing 1 unit times the units produced. In period 1, we produced 30,000. We multiply by 4.5 the cost of producing 1 unit under this variable costing method, which is 135,000. So I'll have 135,000. Period 2, it is 38,000. Under production, the number of kgs is 38,000. Multiply by 4.5, you will get 171,000. 171,000. Period 3, we produced the production units. I see the production period 3, 27,000. 27,000 times 4.5, and here we have 121,500. Then you less the closing stock. Closing stock in period 1, we produced 30,000 and we sold 30,000, so there is nothing like closing stock. That's why it is a dash. Period 2, we produced 38, we sold 27. 38 less 27, which we sold, we have a balance of 11. So that is why you can see closing stock of 11,000. So it shall be 11,000, you multiply by the 4.5, and you'll get the 49,500. Here, period 2, 49. That is why it is the opening in the next, the opening stock here. In period 3. Period 3, we produced 27, let me see, 1,000. Then we add an opening of 11, so we add the openings. So you can start with the opening stock of 11,000. Add whatever was produced is 27,000 kilograms. So this is a total of 38,000, and we again sold 38. So when you less 38, we do not have the closing stock. That's why it's a dash. So this one will give you the marginal cost of sale, or the gross contribution. So the gross, let me get the gross contribution for the cost of sale first, then gross contribution. So let's get the cost of sale here. So that will less from the sales. So this one will be 135,000. This 171. This is closing stock, we should less. So 171,000 less 49,500. I'm getting 121,500. Then you less this one from this, you get the gross contribution. But let me finish up. These are plus. So 49,500. You add 121,500. I'm getting 171,000, unless it from the sales. So let me start 270,000 less 135. I think that will be 135 again. So gross contribution is 135. It is a contribution because we never factored in the fixed production overheads. 243. This will again be, I think, 121,500 because 243,000. 243,000. You're less 121,500. I'm getting 231,500. I'm getting 231. Think. No, I think I should have it to that one. 243. I've less wrongly. 1,000 less 121,500. It should be 121. Yeah, I was correct. 121,500. 342,000 less 171,000. I think it should be also 171,000 if I'm not wrong. Yeah, 171,000. So this is a gross contribution less now the fixed cost or other costs. If there is any other cost, whether it's even if it is not part of production cost, so less expenses or the other expenses. Like I can start with the the ones which are variable, but I don't think there's any other variable costs. I never saw that. So administrative overheads, less admin overheads. We are told it is 25,000 per period. So here less 25,000, less 25,000. It is per period, less 25,000 for each period. Whereas 1/3 of production overheads are fixed. So a third of production overheads. So production overheads we had 3. So 1/3 times 3 is 1 shilling times the units produced, because it's relating to production. I thought it is production overheads. So it is 1 times the units produced in period 1, 30,000, which will be 30,000. So that is the fixed production overheads. Fixed production overheads, which will be now 30,000, the first one, because it is 1 shilling times the 30,000 kilograms. The next one is 38 shillings because we produced 38,000 kgs times 1, which is 38,000 shillings. Then the other one is 27,000 because we produced 27,000 kgs times 1, which is 27,000 shillings. There is no other costs. Then that will bring us to the end of our question, Roman 1. So these will be your gross profits. These are our gross profit for this question. So let's get the gross profits. 135,000 less 25,000 less 30,000. I'm getting 80,000 here. The other one is 121,500. You less 25,000. You less 38,000. I'm getting 58,500. And the last one is 171,000. You less 25,000. Less 27,000. And I'm getting 119,000. Okay, so that is the first part of the question. That is the first part of the question. The other part of the question is using the absorption costing method, or which can also be called the total product costing or total product approach, or it can also be indirect costing method. So all those are all the traditional costing method. So that is what I want us to do. So let me wrap this part so that we can do the same but using the absorption costing. Roman 2 of that question. Okay, so this is the question. So it's operating statement. The company is ABC. So ABC Limited operating statement using absorption costing. We have 3 periods. We have period 1, we have period 2, we have period 3, we have shillings, and shillings there. You have here, then we have there. We need to work it out. That we have done the first one. This second one becomes very easy. You start with the sales or the revenue for the period. So revenue remains the same. I wish I could have just copied, but because I have my calculator, sales is the number of units we sold. We sold how many kgs? Period 1, 30,000 kilograms times. I said additional information 2. A selling price of product Z is 9 shillings per kg. So times 9 shillings per kilogram. I get sales of 270. That is what we had. 270,000. So sales, they don't change whether using marginal or absorption. You go to the next one, 27,000 units we sold, times 9 shillings, you get 243,000. 243,000. For period 3, we sold 38,000. 38,000 you multiply by 9 shillings, you get 342,000. So those are the sales. Less the cost of sales. This one, there is nothing to do with margin. It is now the total one. Total cost, so you just say the cost of sales. I'll put it in short form, cost of sales. You start with the opening stock. Period 1, there was no opening stock. Period 2, I think there's a... Period 2, we have opening stock. No, we don't have opening stock, period 2. But we have period 3 opening stock of 11,000 units. Yeah, period 3 opening stock, when you look at it, you have 11,000 units. So 11,000 units, you multiply by the production cost per unit, and this one uses the total production cost. Here, the total production cost, including the fixed production overheads, it is 5.5. So we are not lessing the fixed production. It is part of production cost. That's why it is called the absorption. We are absorbing the fixed cost in production. So we use the 5.5, the cost per unit. So the units is 11,000 is our opening stock, yes, times the 5.5, the cost per, the production cost per unit, 5.5, which is 6,500. So I love here 6,500. Then we go to production. That you add the production cost or the production. How many units did we produce? Period 1, we produced 30,000. So I can see we have 30,000. Multiply production cost of 5.5 times 5.5, the total production cost per unit, or the production cost per unit, giving you 165,000. Production cost here will be the units produced times 5.5 again. Units produced in period 2, they were 27,000. We produced 38. We produced 38,000 times the 5.5. Period 2, we produced 38 times 5.5, 209,000. So we have here 209,000. Period 3, we produced production here, 27,000. 27,000 when I multiply by 5.5, I am getting 148,500. 148,500 less the closing stock. Closing stock period 1, we produced 30,000 and we sold the whole 30. There's nothing. We have 0 closing stock. Period 2, we produced 38. We sold 27. So there's a closing stock of 11,000. So you have 11,000. So it is 11,000 multiplied by 5.5, which will be 6,500. 6,500. Period 3, we produced 27. We plus the opening of 11,000. So total is 38, and we sold the whole 38. So there is no closing stock here. We sold everything. Then we get the cost of sales at that point. Get the cost of sales. So here, the cost of sales for each, and then when you less cost of sales from the sales, you get the gross profits. This time it is called gross profit because it is taking into account the fixed production overheads, not as in the case for marginal, where we never absorbed, or we never used the fixed production cost as part of production cost. So here we are absorbing it. It is the total production method or total costing method, we have to absorb the production cost, the fixed production cost. Thus, we call it gross profit, not gross contribution. The other one was contribution. So let's do the workings here. To this 165,000 here, there's nothing much. We put it the 165 here. We less it from 270. So 270,000 less 165,000, and I'm getting 105,000. This is 209 less 6,500, 209,000 less 6,500. I'm getting 148,500. You less from this sales. So sales is 243,000 less answer. I'm getting 148. Is it true really? 148,500. Let me say 243,000 less 148,500. 243,000 less 148,500. I'm getting 94. Yeah, that should be the correct 94,500. Yeah. This one, I'm hoping it is 270 less than 65 to 1. For that one is correct. Here, 6,500 plus 148,500. 6,500 plus 148. 500. I'm getting 209,000. So less 209. So 342,000 less 209, 133,000. Then less other expenses. I saw the admin. They said which administrative overheads. So administrative overheads, 25,000 for each period. That is what we had. So for the other one, 25,000 less 25,000 less 25,000. And because already production overheads, fixed production overheads, we accommodated in the production cost, we don't less it here, like the way we did for the marginal. So we have absorbed it in production costs. So it will reach that point, and then you'll get your gross profit. Gross profit for the 3 periods. So my gross profit is 105,000, 105,000 less 25,000. This one is 80,000. Okay, the next one is 94,500 less 25,000. I'm getting 94,500 less 25,000. I'm getting 69,500. The last one is 133,000 less 25,000. So the answer is 108,000. So that is what was expected of you in the question. Thank you for watching. Thank you for being part of my followers. And sure, you just have a comment. You can also subscribe to my channel. It will add me some more subscribers, and even get some people to subscribe on the channel. And I know it has helped you. In case of anything I have said, or as always I've said, can give me a call. Give me a call. WhatsApp me through 0714 023 691. For those watching outside the country code is +254. So you'll start the number as +254, then you start, then 714 023 691. I've said +254 714 023 691. That is my number. And thank you for being my follower and for watching my video. Thank you.